Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders, and welcome to Short-Term Trading Live with Oscar's weekend webinar. This is the weekend webinar for 01-12-08. See, I used the double digits there.
Thank you.
And we have a lot to discuss in this webinar. We're going to cover a few topics here. Fundamentals illustrated in the charts first. I've done videos about this before. I've mentioned this to you many times. I've held up a chart and I've said there's a big fundamental coming out this week. There are certain weeks I don't even know what that fundamental bit of news is, but I'll show you a chart and tell you something big's going to happen. And we have been 100% right on calling a big piece of news coming out through the charts. Whether we call the direction right or not is a different story. We've been lucky with a lot of that. But the point is that you can see news coming out in the charts first. And we will discuss that. Next topic, we will discuss underpriced sectors. Right now, the CRB index is through the roof, and most of the commodity sectors have doubled in price at least since 2005 to 2006, if you pull up a weekly chart. Between the 2005 and 6 basing area and today, many commodities have doubled in price. Metals, we all know they've doubled in price minimum. Oils, you know, what do you say about $100 oil? I mean, $100 crude is just more than doubled in price. I think in the beginning of my studies this week for the weekend webinar, oil was probably trading in the low 30s when I started the studies between 2005 and 6. And now in 2008, you're about at 100. The financials, the bonds, the currencies, the financial instruments, we all know how pricey they've gotten recently. The grains, through the roof. There are two sectors, that's all I can find, are two sectors out there that are not overpriced yet. And I'll tell you this, the fund managers out there who are buying expensive grain, expensive metal, and expensive oil and have already gone through the financials are certainly going to be looking now at the softs and the meats, because they are the only commodities left that I can find that are largely traded, the big commodities out there that the big fund managers will trade, and that all of us Omniacs trade, are the softs and the meats. And I have a lot of charts I want to show to you that will illustrate my point. We will also talk about how technical analysis works. In fact, I'll mention a bit of it now and then I'll show it to you again on charts. On Thursday night, I did a video, and I stated in that video that look at the wheat traders. I put up a wheat chart with some averages, and I said there's a big piece of news coming out on Friday, the crop report. The technical analysis tells us that that crop report has no choice but to be bullish unless we don't know how to read technical analysis. Lo and behold, Friday morning report comes out, and the wheat goes limit up. That came right out of the chart. And that is the technical analysis working for you. On top of that, I held up a chart of the S&P, and both of those charts, the wheat and S&P, I'll do again for you. And I said the S&P needs to be sold. I said it right here in this video. The S&P needs to be sold in the mid-1420s and expect support at 140050. The high of the day is 1423.5. The low of the day is 140025. 140025, we called for 140050. Traders, there's only one way I can come up with that. I have no crystal ball. You know I tell you that all the time. That's because technical analysis really works. And anyone that tells you differently, you make them watch these videos, and you sit down with a chart, and you point out some of the techniques that we've taught you here at the Omni Trading Academy, and you prove to them that they are wrong, like I try and do every night on these videos. Traders, I tell you from the bottom of my heart, I have studied this for years and years. Technical analysis works better than any other form of analysis I have ever studied. Next, market tops and bottoms. We're going to cover market tops and bottoms, or at least the activity that begins to take place when you're pretty much sure that a market is reaching the top of its life of a run. Let's say you've had a good bull run for a long time, and suddenly some things start to happen that make the markets finally cool off and start to turn the other way. Or you've had a bear run and something happens in the economy that makes the market start to go back up. Well, lots of things happen that will make markets turn, but there are signals, there are things, events that take place, and some of them are simple to follow, and we will discuss that, and they almost always tell you that this is the year that the market will change complexion, and we'll talk about that. So, we got the fundamentals. Always come out in the charts first. I will illustrate that in the chart next and show it to you. Underpriced sectors being the meats and the softs. Technical analysis really does work. You'll see that in the next two charts coming up. And market tops and bottoms. I will give you a very simple clue, and I guess you could call it a cue, when you have to start looking for a potential bottom. Okay, traders, with no further ado, let me bring you these charts. Take a look at them. Make sure you pay attention to what I have to say, and then I'll come back to you and we'll discuss it. Okay, traders, what we're looking at is the same chart you've seen in Thursday night's video for Friday's trading. And that was the wheat daily bar, ZWH8, the electronic market. I had mentioned that these two averages that we like to use at the OMNI Trading Academy, when they come together, you have a bull run. The next thing you know, they separate out. The market is in a nice bull run. When they separate, look at the drop. They come back together right here, and I announced on the video Thursday, I said, look at this chart, traders. Do you see what's happening here? These two averages have come together right below the market, right before a report's due to come out, and that tells me it's the technicals letting us know that the fundamental report that's about to come out is bullish. Lo and behold, what happens? The report comes out Friday morning, and we lock limit up plus 30 cents in the wheat. Traders, that came right off of the technicals. The fundamentals always come out in the charts first. I have tried to teach this so many times, and so many of my Omniacs get it now, and they absolutely believe it, and I want you to believe it, traders. This is just one more example of the dozens and dozens of examples we have shown you since we started doing these classes on YouTube. On top of that, look at this. We're about to break out of an apex. So you have an apex, the bottom was tested, the averages come together, the market looks sharp right here, and then the fundamental piece of news comes out to make the analysis correct. You cannot argue with the fact that fundamentals come out in the charts first. Okay, traders, the next thing I wanted to mention, which I spoke about briefly a moment ago, is that technical analysis really works well. That last chart is showing you two things that we chart. It showed you that technical analysis absolutely works and that fundamentals come out in the charts first. This chart is the S&P, the exact same chart I pulled on Thursday evening for Friday's trading. And off this chart, using technical analysis, using different indicators and trend lines, we came up with being able to sell the market in the 1420s and expect support at 1400.50. The market traded to 1423.5, turned around and dropped and stopped cold at 1400.25 and rallied all the way up to 1412, maybe 1413. That came right off the technicals, traders. I assure you technical analysis works. There are fundamentalists out there that will tell you it's hogwash, it's voodoo, it doesn't work, and I am here to prove to you that it is not only a self-fulfilling prophecy, it absolutely is a roadmap to where markets are going if you know how to listen to those markets. And one thing I will say is if you come on down to our site at www.liveatoscar.com and you join the ever-growing army of Omniacs that we have learning every day at our academy, you will find that I will teach these techniques to you, and you will see in not too long of a time that you can call fundamentals off the charts, and you can absolutely call with a decent amount of word here.
Accuracy.
Yes, accuracy. Thank you. With a decent amount of accuracy, you can absolutely call a day's range based on what you see technically. Okay, traders, so you've seen a couple of charts, and I'll tell you right now, you better pull up a chair because you've only seen a couple of the charts that I'm going to show you in tonight's class. But those two charts, even though there were only two, they illustrate very well how fundamentals do come out in the charts first. And traders, believe me, that is a truth. There are, I can think of off the top of my head, 5 videos minimum out of our
257.
Out of our 257 videos, and probably more like 10, that I have stood in front of this camera and showed chart after chart and said, look at the fundamentals. They come right out in the charts, and lo and behold, the news comes out that week to make the analysis work. So there is another example in the wheat chart of how fundamentals always come out in the charts first. Then, does technical analysis work? Well, you know what? That S&P chart I showed you, it is impossible to guess numbers like that. Technical analysis is a roadmap to help you get in and out of these markets. It will almost always give you some kind of a trading range that you can play within, whether you're a buyer or a seller in that range. That depends upon your system and how you handle the trading. But you can almost always determine about how high and low a market will go, barring a piece of news that comes out of the woodwork that nobody can ever pick up on. You know, something terrible, an attack from one country to another nobody knew was going to happen. You know, a natural disaster, something, a volcano coming out of nowhere. You know, there are certain things that you will never find in a chart. But if it is a fundamentally based piece of news, I assure you that it will come out in the charts first. Traders, next, we have to go take a look at a bunch of charts now, because I am telling you that there are 2 sectors left that we may have a chance to buy if you're a long-term trader, if you're a fund manager. Well, let's do that again. Let's look at it this way. We're short-term traders. We need to know where the funds are going to put their money so that we can have a gauge how we should trade each day as a short-term trader, looking at the whole. Which direction will the markets go in as a whole? Then we can determine whether we're buyer of dips or seller of rallies throughout that move, whether it's up or down. So for us to know that, you need to look at the markets, the sectors of the markets, metals, oils, financials, grains, softs, meats. You have to look at them all, see where they are now relative to one another, and then see what's left out there that's underpriced. And I am not the only analyst doing this, I assure you. I expect that funds will be putting their money there next. Let's go look at some charts now, traders. I think you're going to love this. I'll talk to you in a moment. Okay, traders, these next series of charts are weekly charts on commodities that are absolutely overpriced. Well, not overpriced. That are absolutely priced correctly, but very expensive if you're just looking to get a fund into the market. Right off the bat, we're going to look at the wheat chart, the ZWH8 weekly. This chart was as low as about 300, maybe 299 back in 2005, and I made it simple. Right here is the point where the wheat doubled in price. It doubled in price between here and here. Look at how much further it's gone. If you had a fund that had to get into something that you hoped would go up, it'd be really difficult to look at this one and say there's a lot more coming, right? But there most likely is. It's one of the grains. But here's the point where it was, and it hovered for a long time sideways and started to go. And at this point, it doubled. It went to 550. That number's about 560-ish, somewhere around there. And that's where it doubled. That's the wheat. Let's look at more. Next chart we're going to look at is the March soybean weekly chart, the ZSH8. This is a weekly, don't forget, not a daily. Here's where we were back in 2005. At this point, we doubled in price. the market has now doubled in price. And look at how much further it's already gone. So we had wheat double in price, and now we've had soybeans double in price. Let's look at more. Next chart is the bean oil. Here, 2005. Here, we doubled. It doesn't even matter what the exact prices are, traders. We doubled in price. And if you're out there shopping, look how much further we went past double. If you have a big fund and you have to put it somewhere, here's another market that makes you go, I hope I'm not buying the top. I'm likely not buying the top because interest rates are going to continue to go lower, which is going to knock down our dollar, which is going to make oil go up, which is going to make gold go up, which is going to make the price of everything go up. So here's another example of a commodity that makes up the CRB index that has already doubled and more. It looks like it happened twice. On all three charts I've showed you already, they've almost tripled, but surely they've doubled. Let's look at more. Here's another chart. This is the soy meal. You've seen soybeans, wheat, bean oil. Now here's the meal. Back in 2007, this isn't even 2005. We have doubled from 2007 to 2008, and look at what we've done since. Here's another one that if you had to buy it, you know you're buying something that's very pricey. Yes, it could go up, but wouldn't it be better if you could grab a sector that hasn't gone that high yet? Let's see if there is one out there. Here's the oat charts. Traders, even oats have doubled. Cereal and horses, what else is it good for? Amazingly, even that has doubled. And look at how much past double it's gone already. When it doubled, it was 240. It's now 336. And it looks like there's no end in sight. So grains certainly are not the sector to be in. They are the last sector that's finally gone of the main commodities being traded. Again, we mentioned metals, oils, financials, and now I'm showing you the grains. The other three have gone so high there's no sense in even showing you the charts. But take a look at these, and you can see that if you had a fund and you had to buy something again, it would have been great to buy it before the move, even before the second move. Are you brave enough to buy them up here? Well, maybe, but if you could go shopping in the commodity world and find something cheaper, wouldn't you buy that, being that inflation's coming our way and the price of gold and oil keep going up, driving the dollar down, driving the price of all commodities higher? I certainly would. Let's go shopping and see what there is out there to be purchased. Next on the block, traders, look what we have here. Corn. Back in 2006, trading below, well below 200. It doubled right up here at around the 375, 377 mark. Already doubled, and look at how much further it's gone. Another commodity that had you bought it here or even here, you might have been doing all right. Buying it up here is certainly more of a risk, albeit it should still go higher. But I'll repeat, wouldn't you like to get into a commodity that's much cheaper now, knowing that it should go higher? I'm sure there's some out there. I'm going to keep looking through these charts till I find something. Okay, traders, now we start looking at softs. Those were the grains. Look at the softs. We had coffee back in 2005 trading around 65 cents. It just barely doubled already. It's at 135.45, and you know what? Relative to those other commodities we looked at, and the oils, metals, and the financials, this is a cheaper market to purchase. If you were a fund manager, hey, this is only just doubling. Well, those other charts doubled and then took off more. This one just made its double mark. These red lines illustrate where it was and at what point it doubles. So I would say, hey, if I had to buy something, maybe throw a couple of bucks in coffee, right? It's one of the softs, and it's just barely doubled right here. Must have some room on the upside. Let's look if there's anything else to shop for. Cocoa. Back here, 2005, in between 2005 and 2006, was just under 13. Cocoa doesn't double until it hits 2,600. It wouldn't even fit on my chart. If I had to draw a red line, it's so high I can't get it on the screen. Cocoa hasn't doubled yet. Hey, interesting. Coffee just barely doubled. Cocoa hasn't even doubled yet. That may be a good candidate. So it looks like the softs are an underpriced sector. Let's look at more. The sugar market. 2005, we were just above 7. We did have a rally where it sort of went past double. This is the double line. But look at how far down it's come. And during this period right here where it went sideways, that's when all the grains and the financials really had their spike. So here's another soft. Doubling would be up here, just in between 14 and 15. This is an inexpensive commodity right now. So there are only 3 I've been able to find out of dozens that are relatively cheap, and they are in the softs arena. They are in the softs sector. So here's a place where I would imagine fund managers are going to want to look. On top of that, you have a really, really long apex. Well, that apex actually goes like this. You have an extremely big apex that we're just about to get out of. We're just now over the averages, and I think well underpriced, being that it's not even doubled like all the rest of the commodities have gone. So I think this sector is a good sector to look at. Let's look deeper into it. Okay, traders, now we're looking at a cotton weekly chart. Back in 2005, the cotton is below 35. If it doubles from here, it goes to 84.20. So I guess that puts it at 42.10, right? It was at 42.10 down here. It doubles at 84.20. That doesn't even fit on the chart. We're only trading 69 right now. Another market that is one of the few that are left that are just too cheap compared to the rest of the sectors. And again, we're above 3 of our favorite averages. That whole time we went sideways, look at the way the averages were all over each other. Now they've converged and the market's starting to run towards the upside. I am telling you, traders, these are the few markets that are left in commodities that are likely underpriced. These are supply and demand markets we're talking about now. Those are the ones that are truly the commodities that are traded based on what can be grown, how much has been purchased, how much is on order to be purchased, and what we have now. And then, of course, there's the amounts of buys and sells in the market. And the few markets you've just seen now would be the sugar, the cocoa, the coffee, the cotton. These markets are the only underpriced markets I can find, at least looking at what's doubled and what hasn't. This doesn't double till 84.20. I think it's cheap. Let's look for more. Okay, traders, next market we are looking at is Feb Live Cattle Weekly Bar. And in 2006, we were all the way down under 74. You know what it takes for this market to double? The price of 146.90. We are trading currently at 91. It is nowhere near double. It is one of the few left that needs to go higher to catch up with inflation, to catch up with the lowering of our dollar, and to catch up with the rest of the commodity sectors. The CRB is made up of all these commodities that we've looked at, and these are too cheap. These last half that I've shown you, I think are too cheap. Let's look further. Next, feeder cattle. We talked about the soft sector, and now we're talking about the meats. The feeder cattle, I tell you, is certainly cheap as well. We were all the way down here back in 2005, 2006. We were under 80. We are only now at 102, doubling 171.20. In order for that market to double, it would have to be $171.20. That must be an underpriced market. This one, however, is below the averages for now. So if you were buying it down here, you'd have to find a good technical reason other than these averages, and I'm certainly not the only thing that we use. That's one of dozens and dozens of indicators that we go over before we even consider purchasing or selling a market. But there are absolutely reasons why this is getting ready to break out one way or another as well. And if you had to make a choice and you had to put your money somewhere, would you want to put it in high-priced metals or high-priced grains, or the few commodities that are left that haven't doubled yet? I say if I'm a fund manager, I'm going for the lower priced commodities. There's a whole lot more life likely in them on the upside than these already high-priced markets. Let's look further. Next chart is a weekly chart of pork bellies. Back between 2005 and 2006, we were trading below 55. We are only now at 84. The price for this to double would be 132.60. That doesn't even fit on the chart. All the markets that I have shown you except for coffee would not even be able to double on the chart that you can see in this video right now. The chart would have to be way higher for it to get to the spot where it doubles. Again, I ask you, if you were a fund manager, what would you be looking at right now? I would be looking at this stuff. That's why I am looking at it. So let's keep looking. I have another example to show you, and then we'll talk a little bit. Let's take a look further. Okay, traders, you are looking at the weekly CRB index, the basket of all the commodities that we just spoke about. They're all included in this index, and look at this weekly. It has more than doubled, just like all those other commodities. Within this lies the softs and the meats, coffee, sugar, cocoa, cotton. You have pork bellies, live cattle, feeder cattle. These are all markets that help to make up the CRB index, which have not doubled in price yet. I think we should go take a look at those markets, and I think that the reason I just showed you makes a lot of sense. Do your own homework on this, traders, and tell me what you think about it. But if I had to place a bet on where the big money is going to have to go next, it doesn't have a choice but to start to sprinkle it in those two sectors. Okay, traders, so you've seen the charts. Is that interesting? Do I know it will happen for sure? Well, you know what? If I did, I'd throw my kids on the street and sell the house right now and put it into those markets. I don't know for sure, but there's a pretty good guess on my part that I'm not the only guy looking at those sectors. I will say this, of all the commodities that we covered, analyzed, chart, and trade, the softs and the meats are the only two I can find that haven't doubled in price. It's got to mean something, traders. It's got to mean that there's not enough money in those markets yet, but it will be coming. If you look across the board at that CRB, if you have your money sprinkled in all the different sectors that make it up, then somebody's missing the boat on the softs and the meats, in my opinion. All right, so far we've covered fundamentals are illustrated in the charts. They always come out in the charts first. We covered how technical analysis absolutely works. We covered the underpriced sectors, as you've just seen. Now let's talk a little bit about market tops and bottoms. Traders, I've been trading 26 years now. I have seen a lot of markets, both bull and bear, and I can say this is a clue I notice every time we are reaching the top of a big move or the bottom of a big move. And what you start to hear about is this. Not just these exact companies, but here's the type of chatter you hear. Bank of America buys CFC for $4 billion. WAMU and JP come together. Airlines are starting to purchase one another. What I'm getting at is this. At the top or bottom of any major market, you find the big mergers begin to take place. It's always that way. Go and do your homework on this. I lived through it, so I don't even have to go back and check. I know that that's what happens. The big mergers begin to take place. Huge conglomerates buy other ones and swallow them up. And that is almost always right before the trading turn comes. I'm not saying tomorrow we're going to get bullish. I think this is the year that the S&P and the stock market starts to make its turnaround. Remember, what the Fed does doesn't take effect for quite some time. The Fed has been lowering rates for quite some time now. So another 8 and maybe 6 to 8, 9 months out, we may start to get our trading turn. You know what, traders? Capitulation is the second thing that you see at the top or bottom of a market. Capitulation, what is that? That's when you have a bear market that's been working its way down, has rallies, works its way down, has rallies, works its way down, and suddenly has a tailspin crash down week where it's going lower than anyone ever expected. Everyone in TV land's going, oh no, it's the end of the world, oh no, the price is going to go to zero. And you have your big smash down, 500-point down day, and it stops there. That's capitulation. We're starting to get the mergers now. Keep your eyes out for capitulation. When can that happen? Well, October would be a great month for that to happen, right? Anyone who's lived through these ups and downs over the last 30 years, as I have, will tell you lots of that happens in October. Feb to March or October, those are the time frames where you get a lot of that to happen. I think Feb to March is a little too soon. No one knows for sure. So let's look out towards past the summer, maybe into the fall, early winter. Maybe that's where we'll get it. Maybe it won't even happen in 2008, but I'm starting to see the signals that would tell me get ready at some point this year for the big turn. So that's what I mean about market tops and bottoms. That is my experience to you traders. Take a look out, keep a lookout for it, keep your eyes open for it. It will come our way, and I think it will be this year. It's bold to say, but I also got in front of the camera about a year ago with a caterpillar in my hand and told you the grains were going through the roof, right? And that worked out.
Exactly a year ago. It's his birthday today.
Oh, today's Cornak's birthday, 1/12/08. It was 1/12/07 last year. All right, traders, imagine this. On this day last year, I made a major call for the grain markets. Now, on the same day this year, without realizing it, I am calling for the markets to run into a capitulation throughout this year. Just as I did with the grains, I said throughout the year we'd have the massive rally. I think we will get a market bottom sometime this year. Have fun with the downside. Stay with the downside for now. I will keep you informed when I think the turn is coming. All right, traders. Oh, boy. So we covered a lot of good stuff here. I did a lot of homework to make sure that this is as close to right as humanly possible if you're an analyst. So let's see if it works for you. As I always say, do your own homework. Traders, don't trade alone. Let me teach you how to even think about coming up with this sort of analysis. The easiest way to do that is come on down to our site. I'll repeat it again for you newcomers to my videos. It's www.livewithoscar.com. Don't trade alone, traders. We have hundreds and hundreds of traders there. They all come into the chat rooms together. They love hanging out with us. I lend out my desktop during the day and I hold classes. That's called the Gold Class Membership. If you grab a Gold Class Membership, you can come to my daily classes where I lend my desktop out to your computer. No matter where you are in the world, you're looking at my chart at my point in time when I'm moving indicators up and down and explaining how to use them. It is like a live textbook. It's like a textbook 3D. It opens up for you, and I will teach you many techniques to help you out. So make sure you come on down to the site and join us. There, I can tell you this, traders, whether you just learned to look at markets today and have no experience, or you are a very experienced trader, it is a very comfortable place to come to because in our chat rooms, no one will ever belittle you or bash you or say anything more than things that will help you educate yourself and learn these markets better. We police the site in every way, but you know what? We don't even have to. We have such a crowd of nice traders. You know what, traders? My Omniacs, I hand to you. I can't believe how nice you are to the newcomers, how helpful you are. No matter how much help they need, you seem to be right there to say, oh, let me show you this technique. Oscar showed us that technique. In a class 3 weeks ago, we learned this. Let us teach it to you. They make newcomers feel as welcome as an old veteran trader. So I can't thank you, traders, enough. Thank you so much for acting that way to all of our newcomers and to one another. There's a lot of respect at this site. Everybody respects each other. We all respect the Omni Trading Academy, and we all respect technical analysis. That's what this whole thing is about. All right, traders, do me a favor and send me emails, send me comments, send me questions, and certainly send me your homework. Send me charts drawn up with analysis on there and a little paragraph of what you think that chart means, and I will certainly report back to you. I will do the analysis on the charts after you've done it, and I'll report back what I think in your analysis and of the chart you've shown me. You can send those emails to oscar@futuresanalysts.com. Also, we have 200, I'm going to ask you again, 257. He's counting this one, I think. We have 257 videos like this on YouTube waiting for you. So go and do your homework. Catch up to where we are. You can get to those videos simply going to www.youtube.com/futuresanalysts. When you get there, be sure to subscribe to those videos so you know the moment we put another one out, YouTube will let you know the moment you go on YouTube. Traders, we are here to help you bridge the gap from the days of old, from the days when you used to call the trading floors and you had your experts down there that would answer the phones and tell you what bank's buying what and who's buying what and who's selling and what it means, to the days of today where you got to pull that down off the newsreels and disseminate it for yourself. We are here to help you bridge that gap to the days of the electronic world where you sit alone and type on your computer. So make sure you come to the site and join us. The chat rooms are open. The premium chat room's there. We are here to help. Last but not least, I am a broker, traders. I would love to be your personal coach and mentor. Open up an account with me simply by coming to our site. Click on that wacky picture of me standing between the gold and silver bars on the right column. Is it the right or the left, guys?
Right.
On the right column, there are some icons. You click on that picture. It will take you right through the links where you can open your account online. Okay, traders, I hope this helps you decide what you may or may not want to look at for this coming year. I certainly do believe in the fact that the softs and the meats are underpriced if you compare them to the rest of the commodities out there. Okay, traders, this is it. I'm going to get out of here soon, so you know what's coming next, right? You know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.